There's something really special about this episode because today's guest didn't just build a VC fund, he built a movement. And the more you listen to Gabriel Jarrosson, founder of Lobster Capital, the more you realize you're hearing from someone who refused to accept the rules of Silicon Valley and ended up becoming one of the most respected investors in the Y Combinator ecosystem. This conversation hit me hard because Gabriel's path mirrors what so many operators feel before they launch their fund. They have conviction, they have a point of view. You're supposed to be in the room, but the gatekeepers act like you're an outsider. And Gabriel said, okay, cool, let me show up anyway. This dude lived in Paris, never set foot in California, never had YC on his resume. And one day he woke up and realized, if I'm investing in startups, why am I not investing where the best startups in the world are? So he bought a plane ticket to San Francisco, walked straight into the Valley, and started meeting founders. No connections, no pedigree, no warm intros, just conviction and action. And that's one of the reasons why I wanted this episode at Funds on Fire, because whether you're in real estate, tech, private credit, or launching your first fund, you need to hear stories like this. Gabriel built relationships founder by founder. He helped where he could. He built a reputation. Then one of his French portfolio companies got into YC and vouched for him. That crack in the door became a whole ecosystem. That ecosystem became Access, and Access became Lobster Capital. But here's the part that stuck with me. Lobster didn't just become just another YC fund because Gabriel added something almost nobody else brings: media, help, something outside of money. He built the largest independent media brand covering Y Combinator. And in a world where everyone is drowning in noise, founders gravitated to the people who actually serve them, showcase them, and tell their stories. That's what built Lobster Capital's edge. Now, not just deal flow, but founder trust. And his story reminds you of something you forget when you're stuck on the grind. The market rewards people who show up with courage, conviction, and consistency. Gabriel talks about building 7 startups, failing, selling 3, learning at every step, relying on traction instead of ego, betting on teams with real momentum instead of all of this hype that we hear, and being willing to change his mind publicly. Like when he went from "I'm avoiding AI" to "if you're not using AI today, it's a red flag." That level of humility mixed with conviction is rare, and it's exactly what makes a great fund manager dangerous. Now, before I jump in, I want to invite you into something we're building that mirrors that same spirit. If you're listening to Gabriel's story and thinking, man, I want to build my fund, I want to raise capital, I want my lane in this space, that's exactly why we created Fund Founders and the Founder Circle. Inside the Founder Circle, you get a community of operators building real funds. There's weekly coaching, my entire AI-powered CRM and capital raising system, and step-by-step guidance to launch, scale, and grow your fund. It's for people who want to raise capital ethically, compliantly, and consistently, not just once, but on autopilot. And if you want to start at zero pressure, I built a full free capital raising course to get you your first million raised the right way. You can get that at wearefundfounders.com/free capital. And I'll put that in the show notes. Again, that's wearefundfounders.com/free capital. No fluff, no teaser videos. It's a real training with real frameworks you can use today. Because what Gabriel's journey shows, and what I want you to remember, is that fund management isn't reserved for people born in the right zip code or with the right investor uncle. It's the people willing to learn, build, iterate, and show up with conviction. So let's get to it. Here's my conversation with the founder of Lobster Capital, the man who built one of the most recognizable brands in venture, Gabriel Jarrosson. Welcome to Funds on Fire, the podcast that ignites the passion of investment funds and capital raising. Here we turn the complexities of fund management into clear, actionable steps that drive results. I've invested into diverse real estate across the United States and managed thriving funds, and I'm committed to transforming lives through the vehicle of investment funds and helping others to do the same. Join me as we document the journey of scaling businesses, raising capital, and impacting tens of thousands of people around the world. My name is Devin Robinson, and welcome to Funds on Fire. What's up? Welcome to another episode of Funds on Fire. I'm very excited today because today we have a special treat. We are venturing over into venture funds today from real estate, and we have Gabriel Jarrosson on from Lobster Capital. And I've got to say, I've really enjoyed, as I've started kind of my journey in tech and all those things, I've really enjoyed coming to Gabe as as a beacon of information, of knowledge, and then even just hope. He does a really great job providing a ton of value on any platform he goes into, on his podcast, on his YouTube channel, and even other places I've seen him. And it's just a really nice breath of fresh air to see that in a new space that I'm in. And so if you guys are looking for more information, this is your guy to follow. He has, and I'm really excited to talk about his track record on what he does when he invests into companies, but he's just doing it all at a high level and he's giving. And it's really cool to see the intent in which he does it and the high level of intention in which he does it. And so I'm so excited and thankful to have him on the show today. Gabe, why don't you tell people who you are, where you're from? And first of all, I hope it's okay I call you Gabe.
Yeah, that's fine. Well, what an introduction. Thank you so much for having me. I'm very excited as well to be here. I love the energy. I'm a pretty enthusiastic guy as well. So, this is going to be fun. Everyone should just stick around.
Let's go.
So a bit about myself. I'm originally from Paris, based now in San Francisco. I now run Lobster Capital. We're a VC specializing in Y Combinator startups, YC startups. We invest only in the top 2% of YC startups. That's usually the top 2% of the best founders and teams, and also the companies with the biggest revenue. And we also operate a media on the side that you mentioned, which talks about YC and the VC ecosystem. And we're on every platform, newsletter, podcast, YouTube, social media, etc., etc. That's me now. In the past, I'm an entrepreneur, built 7 startups, failed many of them, sold 3, not huge exits, but allowed me to become an angel investor. I've been angel investing for 12 years now before the fund. And then in between VC and angel investor, I was running an angel syndicate that grew to be pretty large. And that's how I got started with investing in YC. So that's sort of how I've come to all of this.
Yeah, that's great. Now, I've actually always been curious. So I'm such a funny thing. It's like a little bit of a selfish thing, but I've always been curious. The name of Lobster Capital, where does that come from? So like, I feel like it stands out, which is great, but it's a little bit unorthodox in the name of like a VC fund.
Well, yeah, I've always wanted to have fun names. I've had other businesses because I've started 7 businesses. I had the time to think about a lot of new names. And so I always liked names that people remembered. Because when you're called, Silicon Valley Ventures, it's like everyone's called that. And I hope no one is actually called Silicon Valley Ventures. Otherwise, I just insulted them. I apologize. But
That's all right.
it's a made up generic name. And so I wanted an animal. I thought it was fun to have animal capital or animal ventures, elephant ventures, whatever, squid ventures, but it needed something that's not already taken. And actually a lot of them already exist. If you look at, my first idea was bee capital. And I was like, had this idea of like, we're going to make you honey because, we're going to make you money. We're going to make you money, whatever. But then you Google it and it's taken. There's like 3 firms, not 1, 3 firms called bee capital, bee ventures. Like lobster, no one dared to do it in the past, I guess. But then very quickly when I found lobster, a lot of things clicked. First of all, lobsters are red. We went with orange, which is sort of that's the YC color, and it's very close.
Yeah, it makes sense.
But there's a lot of things that are super interesting with lobsters. One, lobsters grow forever. They never stop growing. Just like our startups. If we choose them well, they just never stop growing. But in order to grow, you need to break out of your shell. And so it's sort of get out of your comfort zone or whatever. So that's one thing. Lobsters are extremely faithful. They mate for life. That's the "you're my lobster" in Friends. I also grew up with
My
Friends.
wife loves Friends.
Exactly. So there's a lot of who doesn't love Friends? It's a great show.
Is true.
You're my lobster. We want to be very faithful with our entrepreneurs. When we invest in them, we're going to be their investors for life. And so that's another thing. Another very interesting, a few more. One, there's a very rare breed of lobster called the blue lobster. It's one in a million or something. It's extremely rare. So that's how we call our unicorns. They're not unicorns. They're the blue lobster.
Blue lobsters.
You're looking for.
Nice.
And the last thing is there's a parallel distribution in the lobster behavior. There's a very little number of lobsters that will end up dominate all the ocean floor physically. Like most of the lobsters are dominated by a few who control the land and who get the food, etc. So the power law also applies in the startup world. There's a very few number of startups investments in a portfolio that will give you most of your returns. So that was another parallel. So there's lots of things happening.
That is cool, man. There's layers to it. It's not just a name. You came up with something that was super, like I said in the intro, super intentional about what you guys are doing. It's not just a name, which is cool.
Yeah, but also, I mean, I'll be transparent with you. It's luck. I didn't know how well it would resonate with people, but people just love it so much, remember it. So I don't know, bit of luck here, just like you need in the startup world as well. But it's, people love it, so I'm glad. Yeah.
That's awesome. Just so we can like lay the table, so because like I think lay the foundation of the podcast because I think a lot of people are going to need to reference this because a lot of people here, a lot of are used to real estate. What is YC? So
Yeah.
just for context, what is YC so people understand that because there's a reason why you go and gravitate towards those kind of startups that come out of YC. So what is that?
Yeah. So first of all, we're a VC fund, so we don't invest in real estate. We invest in startups. Obviously, I think that was pretty obvious. But just want to remind everyone here. So we're looking at a young company that's hopefully growing quickly, giving it capital, and hopefully the company becomes the next Facebook, the next Uber, etc. YC, so Y Combinator, their full name, is a startup incubator. Certainly the most famous and most successful startup incubator in the world. And for people who, if you have never heard of YC, you've heard about their companies for sure. For example, they incubated Airbnb, Stripe, Dropbox, Coinbase, Reddit, Twitch, DoorDash, Instacart, the list goes on. They've created now around 120 unicorns. So same thing, unicorn company valued over $1 billion. I think everyone knows that. Out of 450 to 500 unicorns in the US, 120 come from YC. So that's how prominent they are. That's how big they are.
Yeah, that's crazy.
And so that's what I gravitate towards. That's where I invest. The thing is, listeners or yourself might be asking, well, why doesn't every VC just invest in YC if they're so good? The reason is YC is not necessarily that easy to access and to invest into. Most of the investment is made by either YC alumni, founders of previously mentioned unicorns who've made some money and come back and reinvest, or some specific what's called sort of YC funds who are really gravitating in this ecosystem, which I'm a part of now. But if you're not a fund in this ecosystem, it can be sometimes difficult to access. And they have their own rules for a lot of things. So again, if you're an outsider and you don't know the rules, it's kind of tricky to navigate at the beginning. So that's why most funds don't invest in YC or rarely. We decided to focus only on that. I'm not a YC alumni, by the way, but I've built my relationship with them, my access over the last almost 10 years. And that's YC. And so to explain how does it work, you apply to YC as a startup. It's free to apply. You go on their website. The acceptance rate is around 0.6%. So it's easier today to get into Harvard than to get into YC, just to give you an idea. They get tens of thousands, close to 100,000 applications every year, and they accept 500 companies per year. And then it's a 3-month program. So you have to be in person in San Francisco, and it's a bunch of founders together. It's three months, and it's just a bunch of deadlines and office hours and stuff. And you have the best entrepreneurs in the world who come and help you and coach you, like Brian Chesky, founder of Airbnb, comes and helps you. Sam Altman, founder of OpenAI. OpenAI was started at YC, by the way.
Yeah,
comes and helps you.
Crazy.
So like, you have all those people in the same room to just help you and you build. So yeah, that's why they're so successful. That's YC.
Yeah. And so for you, and this is cool because like, thank you for laying that so everybody kind of understands the importance of your thesis, right? The importance of why you go there and nowhere else. It's because you're going to choose from essentially what statistically 30% of all billion-dollar companies in the country come from, or in the world come from. And so for you, I would love to.
In the world, there's more. Yeah.
Oh, okay, cool. Good to know. In the country. So, and for you, what was that journey like? Because I think back in 2020, like you had a French community that you kind of told that, and you said investing in YC companies with Leonis, that was your other company, right? Leonis was like investing in Silicon Valley with a French passport. And today, like Lobster Capital, you've kind of crossed the borders and flipped the script in a sense, which like, so how did you kind of as an outside or that outsider perspective shape your early conviction in the YC ecosystem before most LPs like ever touched a deal in the US, especially coming from Paris to here? Does that make sense? Does that question make sense?
Yeah, it does. So that's true. I did not start there. Most of my businesses that I built were built in France, where I'm from and where I was living at the time. And so when I started angel investing, my first angel check is 2013, so it's 12 years ago. And I invested in Paris in a startup that I met that was right there. And for me, Silicon Valley was sort of this faraway land. I was keeping tabs on what was happening in the US just for inspiration. I can speak English, which is not the case for everyone in France, but I was just keeping tabs on it and started investing in France. And I just didn't get the idea that I could just invest there. One morning, I had this, the light bulb moment in the movie. Like I was like, wait a minute, like I'm investing in tech companies in France, but like, are tech companies in France good? Well, not really. But is there a place that I know of that tech companies are actually very good? Yes, it's Silicon Valley. And like, can't I just go there? And I was like, yeah, I can. So 2019, literally never set foot in California in my life. I'd been to the US, but not in California. Book a plane ticket to SF and just show up and be like, hey, everyone. By that time, I had the angel syndicate that you mentioned, and we're doing deals in France. So I had the community who was trusting me to bring them deal flow, the best deals of my network in France, in Europe, etc. But then I just showed up in SF and I messaged a bunch of people and be like, hey, we're doing investments in France. We would love to do them in the US if we find some deals. And people in SF told me, deals, like, that's not a problem here if you're in SF. Like, there's deals everywhere. Finding deals is not the issue. So I was asking, so basically YC is the sort of the end of this road for me. I realized I could just get better deal flow if I went out and looked for it. So first it meant going from Paris to SF. And then when I was in SF, I was like, okay, now SF is very big. What inside the valley are the best places, the best sources of deal flow? And this name kept coming back up. YC, 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 YC. The best deals come from YC. The unicorns come from YC, etc. And then I was like, okay, I want to invest there. And I was faced with the same problem that we just talked about. It's like, well, you're not an alumni. You're not in the network. It's going to be tough. But, tell me something's impossible. And I was like, okay, well, I'm going to try. And I had a few lucky breaks, one being a French company that I had invested in before actually made it to YC after I had invested in them. So that really helped because I had invested in them before.
Yeah, that's cool.
The founder liked me because I helped him on a bunch of stuff, and then he went and vouched for me with YC, and he was like, hey, I have Gabriel as an investor. He's okay. Like, you should let him in. And yeah, that's how I got started. But to be fair, at the very beginning, so that's sort of the first level. Then at that time, I was investing in some YC companies, but I could not access the top of every batch. So even within YC,
You want the cream of the crop of the cream of the crop. The 80-20 rule, right? Except you went with the 298 rule.
exactly, YC's 0.5%. So I want to play in the 0.5% world, but then within that, I'm also doing the top 2%. So then it's top, whatever, 0.00001, whatever it is, right? So I realized within YC, there's a lot of different levels and hierarchies. And so the sort of deals that all the big funds passed on, I could get, but the best deals like everyone wanted to get into, I couldn't get into them. And so again, tell me something's impossible. I was like, okay, let me try to figure this out. And so I started by just, building my network and my reputation and being super founder friendly and helping all the founders with my background as a founder and be like, hey, where can I add value? And this worked. I was getting better intros, better reputation. People were like, okay, this guy really is helping. This guy really understands the community and blah, blah, blah. So it was good. But then it was up to a point because there's a lot of other people in SF doing exactly the same thing. Might not be French, might not have had all the journey. Maybe they're YC alumni, so it's sort of so much easier for them, but they're still here providing value and helping. And so we're still competing with each other. And so this was enough to raise the first fund in 2023. We've deployed the first fund in some amazing, amazing deals. We very often got the allocation that we wanted. That was great. Now we're working on fund 2, and I was like, okay, that's not enough. Like, there's a few other people doing this. Sometimes LPs, investors who are very versed into the space were like, well, yeah, you're a YC fund, but there's 3, 4, 5 other YC funds. Why are you different? And it's true, there's a few others. And so I was not happy being just one of many. I was like, okay, how can I be different? And that's when the media play kicked in. I'd always been doing a lot online on social media. The angel syndicate in France grew very big on the back of a YouTube channel in French where I was talking about startup investing, and the YouTube channel blew up. And so the investing group blew up as well. And so I've always been good at that thing. It's like, okay, I'm going to create a media brand. And so, yeah, today we're the biggest independent media brand about YC, YC being the biggest about YC themselves, but the second biggest and independent is us. Yeah, we do a ton of stuff with YC founders, and try to show the community to the world. And this helps us now being unique because the founders, they know us, they know who we are, they trust us, they know what we think and how we think, etc. They also want to come onto the media to be able to, so this again puts us in a unique position now where we're not the biggest YC fund by far, but now we're the most famous. So that's pretty cool.
That's cool. So really quickly too, because I want to hit on a couple things here, but you've written a book, haven't you?
I've written 2, but they're in French.
Yes, but so listen, I told you I do my research. So this is what I like. This is what I like about you is like you live out what you say. Because I think you said something along the lines of extreme outcomes come from extreme conviction. And so like this idea and it's very much so like I love seeing you live it out. And I'm sure you play that, like you look at that in the people that you invest into. So like, but now as you're managing a fund with LPs and LP capital, how do you balance the boldness with the fiduciary responsibility? But like, also I'm sure you use that as a filter for who you invest in as well, right? Because like,
absolutely.
Yeah, you're playing it out right now. It's fun to watch.
Rules and constraints allow you to be more creative. So that's what I tell my LPs is when you're giving money to a fund manager, you just trust that person with a blind check. You have no idea what they're going to invest. Maybe they tell you we invest in Series A in the US, and you're like, that could be anything. When you give money to Lobster Capital, and I'm not promoting myself here at all. I'm just answering your question.
But it is. Yeah.
I tell my LPs, no matter what, even if I'm terrible at my job, I sure hope I'm not, but even if I am, it's going to be a YC company no matter what. And so what's really interesting is now I can sort of take some very bold shots and bold moves as long as they're YC, because I tell my LPs, hey, listen, YC accepted them. They have traction. And so, it sounds like a crazy moonshot, but that's what you want. It's also making my life so much easier because when it's within the YC community, you have all of those trust layers implied. YC already did the background check.
They did.
They're established in the US and blah, blah, like, when you're giving money to, when you're giving, $250,000, $500,000, $1 million to someone you don't know, and it's not your money, you got to be super duper careful about who you give it. But with YC, everything is sort of fluid. But we've invested in some moonshots. By the way, that's what you want. You want to invest in companies that, if they work, are, big outcomes. And, probably they have a good chance of failing, but you have to optimize for the outcome, not for the size of the outcome, not for the chances of it.
Yeah, that's good. And so when you invest into other companies, I know traction is an important thing. People are always like, oh, what's your traction? Oh, ARR, blah, blah, blah. It's funny too, because like you see things on Twitter where they're like, or on X where it's like, oh, I'm at 10 million ARR. And it's like, we're 5 months in. And I was like, that's not ARR. Like you're barely even done anything. And it's funny because like, as I've grown and sold other companies as well, I have a whole spreadsheet of the 16 companies that I've started, failed, or sold and done stuff like that. So I'm very aligned in what you're, it's a lot, Dan. But I would say some of those are like podcasts or like educational platforms, things like that. So like real companies, I would say it's like 8 or 9. But and so I've been through this roller coaster and I understand. So this comes to like 2 questions. One, I know you've talked about you have this proprietary traction filter where instead of just like the hype or the user growth that people have on like X and stuff, you track early revenue momentum. Can you walk us through where that filter has either made you say yes or no, or to like a buzzy startup that everybody wanted and like you were like no, and like did it work out for you? Did it not? I'd love to hear that. If you're flipping houses, building, or running a fund, here are 2 statistics that you need to hear. First, 70 to 80% of investors reinvest purely because of clear communication and consistent updates. Not returns, not deal size, just communication. And 47% of investors decrease or pull commitments from managers who aren't transparent. Almost half, not because the deal failed or below expectation returns, but because the relationship failed. And that's why we built FundFlow OS. It's the world's smartest platform for for raising capital and managing investors for operators who want to automate their follow-up, track commitments, and manage investors with real structure instead of scattered spreadsheets. Inside FundFlow, your investors have a portal where they can track everything. You can automate updates and reminders, track commitments, wires, distributions. There's a smart matching feature, matching investors to deals with AI, and deliver the kind of communication that keeps capital coming back. So whether you're raising for your first flip or you have a full fund, this gives you the infrastructure you need to run it like a pro. You can get 20% off your first 3 months at fundflowos.com/fire. Again, that's fundflowos.com/fire. Now back to the show.
Yeah, that happens a lot. We
Sure.
we say no. So, you know, of course, on the surface, what we say, and I mean, it's true, is our biggest criteria to choose where to invest is strong early traction. And the reason for that, by the way, is humility, because most VCs fall in love with either a team or an idea, and probably in their career they had the big outcome, and they're thinking, "Oh, I discovered them early because I'm so smart." And actually, this is probably luck. This is the book Fooled by Randomness by Nassim Nicholas Taleb. Basically, you could be lucky a few times, and it doesn't mean you're super smart. And then you're going to repeat that pattern and just invest in companies that you believe in, but nothing proves that your taste or your judgment is the best one here. So I come at it with a lot of humility, being like, my opinion doesn't matter. I'm not smarter than anyone else, and I want to look at the market. If I love an idea but there's no traction, the market doesn't like it, and so I could love it. It's not an investment. The other way around, if I don't really get the idea but they have huge traction, well, the market wants this. They're paying for it. Let's go. I'll invest in it. So that's where we come from. So our number one criteria is strong early traction. But of course, when you say that, there's 10 degrees of finesse that goes into it, of what is that revenue, what does it look like, what is the pace of growth, and what is the retention and the churn, and what's the NR, net revenue retention, and also, interestingly, what's the way of acquiring that revenue? How do you get the new customers? And there's a lot of things that go there. And my background as an entrepreneur, having also founded 7 startups, already 7, I think is insane and too much, but you're at like 8, 9, or 16 or whatever.
No.
But like crazier.
No. Nah. It means that I just fail fast, bro. I fail
Exactly.
fast, and I move on, and I learn. Yeah.
Failed a bunch of times. But so I understand what customer acquisition is and what it takes and how hard it is. And when they tell me this is how we get customers, I understand, because I've been in their shoes trying to get customers for new businesses day in and day out for years and years and years. So there's a lot of nuance that comes into that. And so to answer your second question, which is, I think, really cool, people love those kind of stories. Yes, we do say no to a lot of trendy startups that for a lot of people are very obvious, and often I believe they're it's FOMO, and they haven't digged a lot into actually how it works. And so does it work out for us or not? It's very interesting. I would say majority of the cases it works out. So the company turns out to not perform that well, and so we're like, we were right. It's good. Sometimes it's the other way around. We don't invest in a very hyped company. The numbers don't actually look so good for us when we sort of scratch under the surface. But sometimes, for some reason, the company keeps going and growing and growing and growing. So there's two things here. Either we were wrong, and we were very happy to be wrong. In VC, you don't need to be right all the time. You just need to be right a few times, and you make money, and that's fine. So I'm not at all pretending like I'm God and I know everything. I make judgment calls, and I will be wrong, and I will be right sometimes as well. So sometimes wrong. Sometimes the company is big, but I still think I see a few things that I remember from when and I'm like, is it really as good as they say? And so sometimes I'm just waiting for the other shoe to drop, but sometimes it takes forever. Like there's a company that I said no at seed. It was really fishy. I didn't like it at all. I was like, but the numbers were great. But then there's a few red flags. When I talked to him, I was like, ooh, that sounds really weird, and I passed. But the company's a unicorn now.
Dang.
So they're still going and going really strong. And I'm like, is it all a scam? Is it going to crumble? Or are they going to make it? And by the way, like, I hope they make it, and maybe it's not a red flag and I was wrong. Like, I hope everything's legit, right? But it happens that, companies get very big before they go to zero as well. So
Yeah, that is true.
that's my answer to your question. Yeah.
Yeah, yeah. I think we've seen a couple of those. I think we've seen a couple of those. Okay, you and I have a very similar saying, and I think it plays into what you're saying because I have a question on after the saying, but you say founders fall because they climb the wrong hill too long. And so I have this thing where I say, don't climb the ladder of success on the wrong wall. In like your career, I'm very curious on a lot of the people that you've seen. I mean, even in like your own career, what have you seen people do that um I guess, like, have you seen a difference? I'm gonna reframe my question because you see there's a lot of in because of AI, because of all this stuff, and I'm sure just because of even the culture of YC, it attracts a lot of really young kids, like, just crazy,
Oh
like,
yeah.
they have 17-year-olds in this most recent batch, which is wild, and so then, like but then you've got I like to say I'm seasoned, but then you've got seasoned people like me that are 35. I got 4 kids. I've exited a company. I have crashed and burned companies, learned really hard lessons. But I also know what direction I'm heading into, where I'm going, how I'm passionately doing that. Like all that stuff helps because I look at some of these kids and I'm like, you have no idea. Like you just you have no idea. And so like for you and your thesis, does that stuff play into effect or do you kind of go, well, they started this company, it's working. I'm investing in the company. I like them. The company works. They seem a little bit young, but that's okay. You know, like how does age, experience, all that stuff play into what you invest into?
Yeah, this is a very, very good question, and it's so good. It's not easy to answer. I mean, I'll answer sort of both. So it plays and it doesn't. It does play. So team is probably, I said the number one thing for us is strong early traction. The second thing is team. And actually, why we like strong early traction so much is because it's one of the best information you can have about the team, which is to say, if they've achieved 1 or 2 million of AR in a few months, and of course it's projected AR, but so, so K of MR or something like this, it doesn't happen by accident. The team has to be exceptional. They need to know how to build something. Like you can't fake K of revenue. Like you need to actually ship software. You need to know how to sell it and to find your market. And so unless you have 2 customers paying 50K and it's your dad and your cousin, but otherwise you don't get to 100K by chance. So the team has to be exceptionally good to achieve this in such a period of time. So that's why we like strong early traction. Is it's a very good indication on the team. But we look at other things on the team, including where they studied and where they worked before, and who they are and what they did and if they started previous businesses before, etc. Now, all of that being said, yes, there's a lot of very young people at YC, and studies show that actually most of the unicorns at YC were started by young first-time founders.
Nice.
And so
Cool.
there's probably a bias here because most of YC founders are young first-time founders. But still, if you want to invest in YC correctly, you can't really say to yourself, oh, I'll start investing at 30 plus. Otherwise, you're just cutting
That was
80, 90% of the batch
most everybody.
right away. So that being said, I also believe age is not as important as maturity. You have some, I'm 35, and I guess at 20, I was not mature enough to do YC. And case in point, I didn't do YC at 20.
Mhm.
But then you have founders who are, sometimes I'm amazed. I talk to them and professionally, at least, and in their domain, in their field of expertise, they're just so deep down the rabbit hole and they have so many levels of knowledge and awareness. And then sometimes I'm like, wait, how old are you again? 23 is like, oh my God. Like, but that's great. And remember, some of those are people who've been coding and thinking about business and the world since they were 12. Like I started at 13, and many of those learn how to code when they learn how to read or stuff like that. It's not easy, and sometimes not. Sometimes you see people and very clearly they're 19 and their sort of ignorance about their field, and they don't know much about the world, and you can spot that as well. It does come into consideration, but there's no strict rules on my end. And again, age is one number. It's more like, I should say, mental age or whatever it is, or maturity, whatever that is. So,
Yeah.
and it doesn't correspond always to the physical age.
Yeah, I would agree because um, when I started like the software company that we had, I vibe coded a lot of it. It was incredible, and we'll talk about AI in just a second. Vibe coded a lot of it. It vibe coded like 500,000 lines of code, and then so then I was like, okay, no, let me go ahead and find it worked and I had people in it and then it kept breaking. So then I was like, let me go find technical co-founder. Help me with this. So I ran into these two young kids, but they're incredible. They're like, so they're now my co-founders, but they're 22 years old. I'm 35. I've been through this. So it's really funny for us to lead because like they came from this other startup that had, they came with this other startup that like didn't, but they had a bunch of interns, but also like they're 22. So it's funny for them to like bring them over into this and for me to be like, okay, guys, this is actually how you lead and lead a company and lead people and like how you manage that stuff. And so it's really fun to see like what you said. They are, I look at them and I'm like, I keep forgetting they're 22 because like the maturity level is way off the charts, way better than I would think. And they are very good at what they do. But then also there's other things that correlate to that I'm like, nah, you guys are definitely 22, but this is fun. So it's really cool to see. So in that though, it's very interesting because AI has kind of like accelerated I think it's done two things. One, I think it's you were gonna say something. I don't want to stop you, but also
No, I agree. It accelerated everything. I was going to say everything. You said two things. It accelerated everything.
keep
Keep
going,
going.
everything. So it's done two things. I think in this tech world, as I've kind of like from my 30,000-foot view, it has made the barrier to entry like non-existent, but it also has separated the wheat from the chaff like significantly more where like you now go, oh, they vibe coded that and they know what they're doing. Like there's a clear separation between the two now, which is kind of cool because you get people like me who had an idea, put it together. People were like, wow, I didn't know vibe coding can do this. Let's fix that. And then you have some people who are like vibe coding, and then it's just like, that didn't work out. Let me go into something else. Like I think you had mentioned in 2023, I think I saw somewhere in 2023, you said that you were intentionally avoiding AI deals at the time. Like what were you seeing that other people missed? And then another thing is, has anything changed your mind now that they're like that you started writing AI checks in 2024? Like I'd love to hear about that.
I mean, you went back quite a while to find this. Congrats. Yeah. The AI craze, I would say, started in November 2022 when ChatGPT came out,
Mhm.
and everyone was building ChatGPT. What was called at the time still is called the GPT wrappers, and most of them are dead now. And so at that very time, early 23, I wrote something, I don't know, a blog or something that's saying I'm not investing in AI, and this is why. And this is because it's too early. We don't really know where the models are going to go. All of those wrappers are going to get destroyed. And it's a bunch of NFT bros who are jumping on the next trend, and I'm not at all for that. And I don't see anything real in the real world coming out of it. That changed very quickly, obviously. So that was how it got started. The first few
That's
months
technology.
like this. But it changed very quickly, and I wrote other articles ever since, and even probably edited this one, being like, "Hey, that was true when I wrote it, and it's not true anymore." So I've
And I
been
love that.
investing in AI.
Yeah. What was I gonna say? And I love that because like that, but that's how like, that's the whole NFT craze. That's all this 99.9% of it's gonna be fluff. And then what ends up happening is it crashes and dies, and then it separates the wheat from the chaff, which is why you were like, okay, this is real. Let me reiterate or even just like adjust my thought process on this because I think that's just the natural progression of technology. I think that's just how it is. And I think you
By
as a
the way,
smart, savvy, yeah, go ahead.
sorry. By the way,
Good.
I think I'm always happy to change my mind, and so whatever I say, I'm very happy to say the other way, to say the other thing in next month, next year, and explain to you why I've changed my mind and what happened there. So people probably felt that AI had potential, so no one really dared to say that it was crappy at the time. I said it as I'm not investing now, and very loudly. Just a few months later, only I was like, okay, now it's good. Now I'm investing in AI, and what I'm saying now actually is people sometimes ask me, "Oh, you are investing in YC? It's only AI, like it's a bad thing." And I tell them, if you meet a founder today, whatever he's building,
Right.
that's not using AI at all. We're like, no, 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 we're not an AI company at all. There's zero AI. Like, that's a red flag. Like,
That is, yep.
if you don't find any way to use AI in your business today, especially if you're a startup, like that's a big problem. So every company is an AI company now. It's pretty much like being a computer company or being an online. Having your
Mhm.
website is being an internet company. Like everyone uses AI. So it
Yep.
was early until it was not. I believe those early bets either died or pivoted. If you're betting on the team and the team pivots, that's fine. We don't want to do that. We want to bet on teams that already have found their market and already have strong traction. So we don't want to bet on something that's just not going to exist in 6 months. But now it's very clear the directions the models are taking. It's very clear the types of businesses you can build with AI and the value you can create. And yeah, we've been investing heavily in AI, just like YC has, of course.
This is why I bring this up. So like, I don't want you to think I brought this up to be like, well, you said this, it wasn't true. The reason
No,
why I
that's
bring
totally fine. Don't worry. Yeah.
the reason why I bring this up is because I think what you did is what I think a lot of people lack the integrity, but also like the guts to do, right? Like where I think that it's not when it comes to like put into like a sports analogy, it's not the team that's even most prepared, not the most talented team that wins the game. It's the team that adjusts at halftime. And for you, like you went in, you saw something, strong conviction, like you say, you had strong conviction in it, which I respect. And I think that if you're going to lead something like a fund, you have to have strong conviction in what you're doing. And then you decided, look, guys, I now have my conviction is this, but also my conviction and my responsibility as a fiduciary of the fund is to adjust to what actually works. And so I see that a lot, especially in real estate. For me, I've got a real estate fund in my fund. We went through the worst housing market in the last 30 years. So we had to pivot, right? We have to do things like that to make sure that one, we remain a good fiduciary to our investors and our investors get their money back regardless of what the market does. And so for you, regardless of what your initial thoughts on were AI, you saw and you pivoted. And I think that's a really strong thing that you do and you have to do. And so I love that. I love that you, I love that you put it out there. And then you also said, actually, this is where it's heading. And so I'm curious. I actually went to an AI forum here in Charlotte for tech startups, which was cool. I'm very curious on what you see then. What becomes like the defensibility and the moats of a lot of these companies if they're all just using AI? Because like everybody has it, then now is that the criteria that you base your investments off of? I'm curious.
Yeah, I love this topic. My investors have been asking me the same question many, many times. Like, yeah,
Sure.
everyone's doing it. Especially, I think a lot of people realized with vibe coding and all the new tools that basically anyone can build anything pretty easily now, and it's only getting better. Like, it's the worst it's ever going to be today
I love
because
that.
it's only getting better every day. And so, I actually think this is sort of a false narrative, actually. Um, the reason is those are the reasons. If you remember 10 years ago, you could go on YouTube and you had a video of how to build the Instagram app in 2 hours. So it was already available for anyone, even without vibe coding and AI, to build the Instagram app in 2 hours, or how to build the Facebook or the Twitter website in 2 hours, etc., or how to replicate the Airbnb website. The value does not come from coding the actual software;
Mm.
it comes from everything else around it. And so it's the same. You could say, oh, how does anyone get value from building their website when everyone else can also build a website or anyone else can also access cloud storage or whatever? Like, yes, but that's not it. So you build a business around everything else. And so for AI companies, it's still the same thing. What's different? So, yeah, it's still the same thing. And then I'll go into what's different, but it's still the same thing. What makes your business is your brand and marketing, your customer acquisition strategy. How do you get customers? UX and UI and customer service and how you treat customers, like, Amazon, Airbnb treat you, every time there's a problem, they're going to be here for you. Well, Amazon more than Airbnb, I should say, but I'm sure Airbnb is trying. The proprietary data that you get, even if you're using AI, you get the data from, I get a merchant company that I talked to today that I'm evaluating for a deal, and they just store the customer's credit cards, and so it's in their vault, and so they have that data that's proprietary, that's they own, and regardless of AI. All of those things are what makes a business. Many more that I'm forgetting, but everything that goes around it. What's different here is the models keep changing and evolving. You're not, a website is always a website. It's www.lobstercap.com. It's not going to change, but the models get better all the time. So what I look for and what I tell to my investors and to my founders when they need to hear it is think of it as a car. A car has a lot of parts, but the AI model is the engine. That's what actually makes the car go. But if you only have an engine, you can't really sit on the engine and go. Like, it needs, the wheels and the doors and the whatever, the windows and the roof and the car seat and everything else. And so this is your business. You build everything. You build the windshield and you build the car seats. But then when there's a new model, it's just like swapping for a better engine, and then your car is actually going to go faster. But that's how you should think about it. You should make the models interoperable and easy to switch, but you should build everything around. And again, that's the brand, that's the customer acquisition, that's the UX UI, that's how you serve your customer, that's your data, that's everything else around it.
Yeah, it's good.
Yeah, that's how you should think about building today.
Yeah, I think the thing that people underestimate is the power of a brand. The brand is,
Yeah.
yeah, what you build. So one of my partners in my other company is a brand expert, does it for like Chick-fil-A, for all these. He's just very good. And so we talk about that constantly, is like, how do you make sure that your brand is one, it speaks exactly to who the people it's supposed to speak to? Because I think like branding becomes a majority of your valuations. I'm sure there's revenue, but also like the amount of the brand that you have out there, the reach that you have, the cult that you create, the people that are a part, like that becomes a big part of evaluating your company, which I think is really important. So I'd be curious for you, as a media company, as these things, as a VC, what type of things do you help the people that you invest with outside of just money? Like I think a lot of people don't understand it. It's very different in real estate, right? In real estate, hey, you invest into my fund, great. We're gonna do this. I'm gonna give you your distributions, great, perfect. Have a great day. But I think in VC, it's a lot different. I think you're a little bit more involved. You're a little bit more engaged. You're a little bit more helpful. So I'd be curious to see what does that look like for you and what you guys do at Lobster Cap.
Yeah, it's true in VC. It's even truer in Y Combinator in this ecosystem, because a lot of VCs, from what I've heard, I'm not targeting anyone specifically, but a lot of VCs say they're helping, but then when you ask the founders, they're like, oh, they give us the check, and that's it. That's probably the case for a lot of VCs. For YC startups, it's very different because it's the best incubator in the world. When they go through the program, and usually they have a seed raise at the end of the program, and they're, let's say, raising usually 2-3 million. For the sort of high profile that we invest in, it's maybe a little more, maybe 5 million. But usually they will get 5 to 10 times that money offered to them, which is to say, they want to raise maybe 5 million, or not even maybe 3 million, but they're going to get 30 million offered to them. And of course, they don't want to take the entire 30 million because that would be too much dilution. They just want to take the money that they need and not give away too much of their equity. So how do you choose? So money at that point is almost irrelevant. Everyone has the same whatever millions of dollars, and they have to choose only 10% of the people that get to offer to them. How do they choose? The answer is they choose on what can you bring on top of the money, obviously. A lot of people have a lot of different answers. For us specifically, that was your question. I'm happy to answer that. It's probably 3 things. One, I help them personally with my past as a founder, having built 7 startups, sold 3, and just struggled so much, to be honest. I know usually when they're stuck somewhere, I remember I've been in their shoes at some point. So there's almost always something I can help them with, almost always, whatever they need and wherever they're stuck, I can help. So that's the first thing. The second thing is I've invested in more than 100 YC startups now, in my life, and many more startups in general, if you just don't do the YC tag, but even in just YC startups, more than 100. So I've seen a lot of stuff, what works, what doesn't. I've seen companies succeed and fail. I've invested at seed stage in companies that became unicorns. I've invested in companies that became unicorns and then failed and went back to zero, and we lost a lot of money. Like, I don't want to say I've seen it all, but I've seen a lot of stuff. So again, I can help them here, do some pattern recognition and matching, put them in touch with other companies. Like, hey, I know another company that had that problem. Let me put you in touch with them. This is how they solved it. So that's the second thing. So my own experience, as an investor and all the companies. And the third is the media itself, both giving them visibility, showcasing them on our media platforms to give them visibility, and also helping them building their own medias and brands.
That's
Whatever it is. If they need LinkedIn, we do LinkedIn really well. If they need YouTube, we do YouTube. If they need podcasts, we do podcasts. So again, there's almost always something that we can help them with in terms of media, and it's valuable for probably every company in the world, regardless of what they're doing. So those are what we help with.
That's cool. I'm curious too. So you're just a YC, like you just invest into YC. So, ooh. All right, I'll ask this question too. I have so many questions. But have you ever considered, and have you thought of even just like starting up a second fund? Because like I feel like what's cool is like now I think because YC has done it so well and people have seen the emergence of it, I feel like there's starting to be an emergence of other incubators like A16Z Speedrun and things like that. Have you ever considered being like, well, what if we start an A16Z podcast or a fund? Because I do think the quality is going to be similar there. Maybe not in other incubators, but I really do think it's going to be like YC A16Z and then like whoever knows who else. Like, would the same conviction apply there without as much of a track record as YC? Like, would you ever consider anything like that?
Yeah, I get asked about this a lot. I don't think it's reasonable to run several funds in parallel. So I guess there's room for someone else to come and do it next to me, especially with where we want to take Lobster Capital. Like we have very, very big ambitions. But that being said, for now with YC only, it doesn't have to. It could be that it's not YC only in the future. It could be YC and Speedrun and a few others, best incubators in Silicon Valley. So far, YC has served us well, and I still believe YC deals are better than Speedrun deals on average. Not on average, actually, that's interesting. On average, it's probably the same, but the very best deals of YC are the ones that I'm interested in. Those ones are only in YC for now. Again, like remember we talked about changing my mind and stuff like that. I love changing my mind. I want to change my mind. So I will reevaluate. I'm reevaluating constantly. So maybe in 2 years, YC is completely toast and it's only speedrun, then I'll do speedrun. Or another one that we don't even know about yet. For now, I still believe YC is by far the best. They get a lot of people saying it's not as good or whatever, but that's mostly people who don't
They
really
didn't
know
get in.
YC. Yeah, because they didn't get in,
They didn't get in.
or sort of don't really understand YC, or they see only some companies, but they don't see the best.
Yep.
So objectively, today I still think YC is the best, but we're aware that this might not be the case forever, and we can adapt.
I love that. Now, a part of that too, a little bit more of like the legacy play. Like you've built your fund, your brand, and even your investor community around your name, but you've also said that you want Lobster Capital to cultivate, or sorry, to outlive Gabriel Jarrosson. So like, what are you doing now to remove yourself from that bottleneck? Because as we know, like bottlenecks typically are the things that slow businesses down the most if you've actually grown and, scaled a business. Do you find that can be a bottleneck, or do you find that like you're putting systems and processes in place to eliminate that?
Yeah, both. I've been building companies for I don't know 15 years now or even more, and I've always been passionate with building systems. It's very interesting. I built a company to 1 million ARR with no employees, just myself before AI. And so everything needed to be automated one way or another or delegated. So I've been a sort of I don't know, systems implementation geek for many,
Yeah,
many, many years. So
have to be.
I still try to bring this to Lobster Capital today. In a sense, a VC fund is somehow different in its early years. I have to be the bottleneck. For example, fundraising, when you're talking to LPs who want to commit big checks, they want to talk to the manager and to the GP. So it has to be me. It has to be my time. And so this way, I am the bottleneck. Investing, I've also developed a philosophy, but I'm still that I can teach to people that I'm still making the investment decisions. And so in a sense, I am the bottleneck as well. I'm planning on doing this for the next 30, 40, 50 years. So I don't have an urge to replace myself quickly. But yeah, I'm always thinking of how can the fund run without me, and then I can be involved wherever I want, whenever I want. But if I don't want to be involved in one thing, it can just run without me. So yeah, it's weird with a fund. Like if it was any other business, I could remove myself better and more efficiently and quickly. This one, there's a lot of things that needs to be me, but I love it. It's the business I chose, and I gave away other businesses to focus on this one because I love this more. So I'm pretty happy being somehow a bottleneck sometimes.
Well, I love it, and I love that you love it because, like, so I teach launching and scaling investment funds, and I do trainings every single week, and I always tell people like the most lucrative business structure in the world is funds, and so being able to leverage and use other people's money to be able to fuel what you do and the expertise that you have allows you to scale infinitely. And so for you, I'd be very interested because I know similar structures for real estate and all those things. Are you structured like do you do like a typical 2 and 20 model? Is that how you structure it for your LPs, or just because I know some people are separate, some people do different things. I mean, is that what people who invest in your fund expect? Is something like a typical 2 and 20? And then Is your horizon like, are your cash events, are those things where like, hey, this company sold or IPO'd or whatever, here's the profits that came from it and you do it then? Or are you like at the end of the 5, 10 years, the value of the fund, you split it?
Yeah, so we are standard 2020. Someone told me if you do something weird or exotic or whatever, then the discussion is not about the fun, it's about the fees. And so, you just want to remove the conversation. Like, we're standard
Nice.
2020.
Okay.
Yeah, we target to sell at either exit, like acquisition or IPO, just like you mentioned. But the fund has a life of 10 years. And so after 10 years, we are supposed to give the money back to our investors. I'm saying are supposed to because we can't always decide and control the outcome. But there's actually a lot of options after 10 years for investors who want to. So, by the way, I think with AI accelerating everything, most investors will get more than one time their money back before the 10 years. Yeah, you should have at the 10 years mark, you should already have multiple times your money back, hopefully. But for the remaining, there's a lot of solutions today, including secondaries. You could sell a position, like you could sell shares of a startup. You could also have liquidity between investors. Someone is exit, someone to add more, and you could sell between each other. And then you also can sell the entire fund portfolio. There's a lot of secondary funds who would buy from LPs, just buy all the positions at once from several LPs. So all of those things are possible, pretty well developed in the US, in Silicon Valley. So there's lots of options. You don't need to be stuck with the cash if you don't want to.
That's good. And I've seen an emergence, which is really cool, of these GP stake funds, very similar to what you're saying, where people will come in and they'll buy shares of the GP, which is that's fantastic too, because you get really massive upside on a lot of that stuff. Okay, now this podcast is called Funds on Fire. I would love to know for you what fires you up about your fund heading into 2026. As we kind of end this year, we're heading into 2026. Even for you heading into the new YC batch to go on a demo day, which I'll see you there. What fires you up the most about your fund currently heading into it?
I mean, there's two things that I'm so always excited about and just give me so much energy and I guess make me happy. One is just the media that we're building. It always feels good when you're building something and you get the results that you want. So our media is sort of an inflection point. We've been building for many months, but that's also I've been building the team and the processes and the stuff so that I'm not the bottleneck on the media, just so we can do more and more and more and more. And every month we're just doing more stuff. Like, we keep publishing as much, but we add new stuff better, and you just make it better and better and better. And so the results are trickling in. We're getting more and more and more and more views and exposure and visibility. So that just makes me very happy. I think we've only done 1% of where we can go with the media. I think it can grow much, 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 much bigger. I'm excited about that. I see the potential and I see we're headed there. So that gives me a lot of energy. I think 2026 hopefully will be a pivotal year for the media. Again, we're in the YC ecosystem. We're famous, but we're not one of the biggest US medias by far, even on the investing front. But there's the potential to get there, and there's the energy and the will. And so that's what we're building towards. We want to go have bigger, like as big a media play as Andreessen Horowitz and the big names out there. So it's a lot of work, but we're getting there. That really fires me up. The other thing that fires me up, you touched on it, is going into a new demo day. Now there's 4 batches a year and 4 demo days a year. So YC is almost nonstop. Like, as soon as a batch ends, a new batch starts. Just always seeing those new companies, meeting those new entrepreneurs. I mean, I get to work and meet people who are much smarter than me all the time. All of those founders
Mhm.
who just have amazing ideas and energy and ambition and want to change the world. And it's just so fascinating. My investors tell me I sort of get to live into the future because I
Yeah.
see everything being built. Like, very often, the newest technologies and innovations and the new startups and the new, the unicorns of tomorrow are being built at YC right now. And I get to see them and see what's possible with AI and what you can do. It's pretty insane, by the way.
That's
Very
fun.
impressive. So that just gives me so much, like, I'm so lucky to be talking to those people almost daily and then investing in them and sharing in the profits as well. Like, I get to talk to them, pick my favorites, give them money, and then some of them end up doing really well. That's what's happening in the first fund. Like, we have amazing companies growing at an incredible pace,
Good.
and then my investors are going to make money from that, the fund is going to make money from that, and it's pretty incredible, honestly.
Oh, man, I love it. This is awesome. Well, I appreciate you coming on, man. This has been incredible. I've enjoyed getting to know you and being able to hear more about your story, what you do, who you are, and how you're leading and changing the world. Where can people find you, just so they can follow along the content and along the journey?
We're onto every platform that you guys are. So wherever you like your content, our biggest platforms are LinkedIn, X, YouTube, podcast, but we're everywhere else. We have a Substack as well. So, wherever you like.
Cool. And is that at Lobster Capital or is it at Gabriel Jarrosson?
Yeah, there's both, but it's mostly, you mostly follow Lobster Capital. I mean, follow whoever you want. You can follow Lobster or myself, but yeah,
I'll put the link to both.
it's a bit of both. Yeah, thank you. Thank you so much. And thank you for having me. I had a blast. It was really cool.
Oh, man, thankful for you being here. I appreciate you. And I look forward to meeting you one day and hope you have a fantastic day. Thanks, man.
Thank you. You too.
Wow. I hope you enjoyed that. I have a quick favor. If you've been enjoying the show, there's one simple way you can support us, and it's by hitting that follow button or that subscribe button on the app you're listening to. I want to level this podcast up in every single way possible, bringing you more value, incredible content and guests, and new strategies. Following the show and leaving a quick review goes a really long way in helping us to grow and continue to deliver top tier content. It's the only free thing I'll ever ask you to do, and it makes a bigger impact than I can possibly put into words. So thank you for being a part of this journey, and I'll definitely catch you on the next episode. To great success and greater impact. Peace.